Thank you so much for joining us for another episode of the StashCast. The StashCast is brought to you by Needle. What if you could use data and analytics to predict real estate transactions before they occur? You can with Needle. To learn more, go to nedl.us. All right. I have Zach with us today, Zach Dovner. Zach, thank you so much for agreeing to be a guest. I have a general idea of who you are, but why don't you give the audience an idea of who you are and what you do?
Sure. My name is Zach Dovner. I work for Eastham Capital. And I will preface this conversation by saying that anything I say, I represent as my own, not for Eastham Capital. So if I see something really not intelligent, blame me, not Eastham Capital. I've been with Eastham Capital now for almost 12 years. Originally from Boston, now live in Florida. The company moved me there from Boston to Florida in 2015. And my role at Eastham Capital is I'm the head of acquisitions. So my role is to oversee all of the acquisitions at Eastham Capital. Right now, we own about 15,000 apartments across the country. It's all multifamily. It's all mostly boring garden style multifamily. So my quick background is I was an attorney in Boston. I was working pro se, fighting evictions, and I networked and I met Eric Silverman. And Eric, during this meeting about almost 12 and a half years ago at this point, said to me, I'm going to give your name to a bunch of law firms in Boston. And I called him 2 weeks later and he said to me, Zach, I didn't give your name to any law firms. How about I hire you myself as in-house legal counsel for Eastham Capital, also as an analyst? I said, Eric, that's wonderful, but I know very little about private equity, real estate law, and I know very little about analytics at the time. And Eric just had a good feeling, good vibe, took a shot on me. And that was 12 years ago. Back then, Eastham Capital, we were investing our third fund. At that point, it was a $50 million fund. We are now investing our sixth fund. It's a $400 million fund. Back then, we were writing equity checks anywhere from 1 to 5. And now Eastham Capital can write equity checks anywhere from really 1 to 1 million on the low side, as high as 30 million on the high side. And so my role at Eastham is to literally vet deals all day. I would say we say no most of the time. Stash, I'm sorry, as you may know. But once in a
I,
while, we do say yes.
I
Right
get
now,
told no to for a living. That's like
hey,
my life.
but here's what I promise you. I think what makes us different than most other firms is we are a quick no. So if we don't like the deal, I can get back. There's only 9 of us at Eastham Capital. There's 3 of us in acquisitions, which I run up. If I don't like a deal, I can get back to you within a day or two with, I think, thoughtful, good analysis of why we don't like the deal. We're not going to be a 2 week no and not get back to you. So we pride ourselves on quick feedback. And if we like it, we'll do a phone call. We'll ask lots of questions. And then if we really like it, we'll make a deal. So
That,
that's my quick background.
that's the worst when you get a slow no and they put you through the ringer with every single nitty gritty detail. And then they're like, yeah, we're 20% off. And it's like,
By the
what
way,
was the point?
it's like that in real life too. If you're dating someone and you're trying to date someone, they don't like you. A quick no is better than like, oh, I'm interested. I'm interested in it. Just waste your time. If you're not interested, just let me know. I'll move on.
Yeah, exactly. Um, so your world to me is fascinating because you're the wizard behind the curtain because I see the guys that you partner with. So how do you proof a sponsor? What are your criteria for those guys or girls?
It's a great question. We have some sponsors that own and manage, I'd say 30, 40,000 units. And then we have one sponsor I'm thinking of in particular. We started working with them. They had almost, I think, 700 units. So it's as generic as we ask around in the industry if we think someone's a good fit, reputation. We'll certainly call all of their properties. And if we think they're a good owner operator, that certainly goes a long way. But we'll look at analytics. Internally, we have some software that we can see how their properties are doing, if they're doing well or not. But yeah, and a lot of it sometimes is a gut feeling as well. You're on a phone with a guy and you're asking them tough questions. How well can they answer them? The
Mhm.
guy that had 700 units that we partnered with in 2019, I think he's up now to about 3,000 units. He would answer questions and he knew every detail of every question. He's a real estate guy.
Yeah.
And there's some of it's just your gut. This guy's a real estate guy.
Yeah. He was
There's
able to.
lots of guys in this industry who are really fun guys doing real estate. They're finance guys, but they couldn't talk refrigerators or kitchen cabinets. They're just numbers guys. But we want to invest with really real estate guys. And I think what makes Eastham Capital also unique and different to this point, we've transacted on about 35,000 units. They're all with groups that self-manage. They're vertically integrated. Not to say that in the future we would not do a deal with someone who hires third-party management, but just to this point, it's been with all vertically integrated self-managed groups. And it's worked out really well. We have a great track record.
That's awesome. Interesting. So
Ash, I'm probably your most uninteresting guy you've had on the podcast.
I disagree. I think you're very interesting.
But
But
I'd say my job is a lot like the show Shark Tank, where people are pitching us deals every single day. And they're really businesses. And they're saying, hey, look, is this a good deal or not a good deal? And the analysts that work with me and the three of us, we determine pretty quickly, hey, is this a fit or not a fit?
so
And
what are
you got to be a little sensitive because people, the deals that you pass on, these are people are really passionate about these deals. But we have a box at Eastham Capital. We want to stay in the box.
what are some of the tells that if somebody they're super passionate about it, they believe in it, but you maybe hear one, two, or three things. What are some of those things that you're like, nah, and for that reason I'm out?
All right. So let's say it's their first deal in the market. Let's just say they're based in Cincinnati. They're buying deals in Cincinnati, and then they buy their first deal, and let's call it Sacramento, California. Stash, you'd be surprised. It happens a lot. Not Sacramento, but in a market they don't invest in.
Yeah.
And look, I live in Delray Beach. I can tell you what's happening on Atlantic Avenue in Delray. I can tell you what's happening maybe in Boca. I can't tell you what's happening in Cincinnati. I can't tell you what's happening in Sacramento. So we want to be with someone who has a local track record of the market they're investing in. That's probably the biggest off the bat is track record and experience.
In the market or in similar market?
Maybe sure. It can vary. And the other thing too is with us specifically, and it's why it's been slow recently on the acquisition front is my view of risk mitigation is strong cash flow. If a deal doesn't hit 5% year one, I'm a quick out. I don't want to play. So again, if we get a deal in and its cash flow is 2% and then 4% year two, we're a really quick pass. It's funny. I spoke on and I tell this story all the time. I spoke on a panel in 2022 in Atlanta. It was like March of 22. And I said the same exact thing. My view of risk mitigation is strong cash flow. And the guy next to me looked at me like I was stupid. He goes, I don't care about cash flow. I don't like cash flow. I don't care about it. It's all about appreciation, Zach. It's about cap rates compressing. I would love to talk to that guy today.
Right.
I don't know if he's still in the business.
Let's go figure out what his portfolio is.
I don't know. I don't think he's doing well. Good luck. But I was debating on stage in front of 1,000 people. Do I call him out right now or do I just not say anything? I'm not going to say anything. But I don't know how he's doing today. Good luck.
Yeah, probably not great.
So we are seeing deals right now. And this is the common trend I'm seeing is these deals. And I'll give you an example. There's a deal in the Midwest. I'm not going to say where. But it traded for about $40 million in 21. It's now about to trade for 22.
Oh, wow.
I'm not making this up.
Wait, 40 to 22?
Correct.
Oh, wow.
I'm not making this up. This is a true story. And we have a group that's showing it to us, and we love the group. They're awesome guys. But the property at 21 or 22, it's distressed, and they can't finance it well. And although as the basis is incredible, the seller's losing all their equity, the bank's losing lots of money, but you go to underwrite the deal and it cash flows 2% year one, and again, 4 or 5 year two. And again, the basis may be amazing. That value may come back. I'm not saying it won't, but it just doesn't work for the box of Eastham. We want cash flow. I want cash flow.
Yeah.
So we passed on it. And there's more deals I'm seeing like that.
Really?
I am.
In my world, we've been hitting on floating rate debt deals and upcoming maturities, and people are still playing it close to the vet. Oh no, we're fine. We're doing all right. And are you really though? Because you bought this at 5% interest rate and you're at 9 today. What's going on?
It's funny, man. There's this mantra in the industry. Oh, I'm doing wonderful and everything is amazing. I went to NMHC in San Diego where I saw you, the best meeting of the
Right.
conference,
Right.
obviously. And every meeting I had, everyone's, oh, all of my debts fixed. Everything's wonderful. I'm like, I don't believe it. So finally, the end of the night, I'm speaking to a guy. We're having a beer after hours. And I say, I can't believe it. Every meeting I'm in, everyone has fixed. The guy says to me, he goes, Zach, I own 10 deals. They're all floating. I'm nervous as hell. So it's out there.
Yeah.
There's pain out there.
Yeah. It just honestly, in the past 2 weeks, I feel like the winds are shifting. We got, we signed up 4 listings. We got verbal on 4. We signed up one of them, and the other 3 are coming. So it's, and we went for 6 months before this without anybody wanting to kick the tires at all on listing.
No, my
Um,
investment sales emails throughout the day, it's been pretty intense the last few weeks. It's coming in pretty hot and heavy.
yeah. Yeah. So hopefully
As an
that
acquisitions guy, I'm getting excited.
that's good.
I will say we did buy 7 deals last year. I think I was like the only group at the conference that bought 7 deals. So maybe we're really smart or really stupid, but we'll see.
If you're so I, I like your stance and I get it on the cash flow. I've never understood how deals work like without that. It's like you're living in a fantasy. How does that work?
You're hoping for cap rate compression in the world, the real estate world, just to stabilize in 2 or 3 years, and it keeps growing.
Yeah.
Here's the reality. There's a great stat, and I could be butchering this, so don't quote me. I think like new starts are down between 60 to 75%.
I think you're right. I think you're right about that stat.
So here's the reality. You come to 2026, it could be a wonderful time for multifamily. The problem is, and what's hurting us and hurting everyone is you're having insurance costs go up dramatically and you're having taxes go up dramatically. It's hurting the bottom line. But if the starts are down that much, people need a place to live, man.
Yeah.
Like it could be a great time to be in multifamily. So some of these groups that are struggling, if they can make it to 26 or 27, maybe they'll be okay.
Hmm.
That's my thought. What do I know?
If they're draining their reserves though to get there, if they have them.
Oh, they're making it happen. Yeah, it's not fun. It sucks.
Yeah.
Totally sucks.
What about though a deal like in your box, your buy box, so to speak, that has a tremendous like value add play? Is that where the year 2 cash flow comes in?
So
If there's a
historically,
story to it,
historically, we would love the value add deals, and especially the deep value add deals. We bought a deal in the end of 2019. I'm not joking. It was in Fort Wayne, and we bought it for about 15,000 a unit. It certainly had no cash flow year one. I
right?
think we put about 20 grand a door of capex into it, all into it for, let's call it 35 or 40. And the height of the market, we got lucky. We sold it. We sold it for 75 a unit. So we made 35 a unit on about 400 units. It was amazing. So that deal had no cash flow year one. Just where we are in the cycle right now, with everything so volatile, I wouldn't probably invest in that deal today.
Yeah, that makes sense.
It's just so crazy out there because God forbid we underwrite to 5 or 6 year one, and let's say we don't hit it. Okay, now maybe we cash flow 1 or 2%. At least it's something coming back. I can pay the bills and I'm making some money.
Yeah. Where do you raise your capital from? Because as I'm familiar with it,
Yeah.
the syndication model is I and my team, we're going to go out and raise the capital and manage the deal and asset manage it. And like, why would somebody want to use you guys?
So I am not a fundraiser. So Eric Silverman in my office is an incredible fundraiser, and he's working now with a guy named called Bill Lowe, and they're going to raise our 7th fund hopefully later this year. And it's mostly high net worth individuals. It's that average doctor or lawyer who's looking to diversify their portfolio. And we have a great track record. I think our track record is like 150 deals, and I think or 151. I think we're like 150 in one.
That's great.
So it's someone who's looking for not to be in the stock market, who's looking for cash flow. And again, it's the average investor is your local attorney or doctor who's looking to diversify. It's not like one large fund pension that comes into our fund.
That's good. It diversifies you guys from being beholden to one specific group.
Yeah, and the nice thing about Eastham is we can invest in all types of deals, right? So we just did that deal I told you in 2019 that was heavy distress and gross and 10% occupied and built in the 70s. You couldn't get more distressed than this deal. And then a year ago, we bought almost brand new construction in Fort Lauderdale.
Okay. What was the draw to that?
It's a great story. It sold in March of 2022 for I think about $108 million, something like that. Don't quote me. Don't give me the exact numbers. It's like 106 or $108 million.
Round numbers. That's what we're talking.
And we bought it a year later for 86.
That's a good story.
Yeah. So unfortunately, the seller lost some money there, and it just felt like too good of a deal. And we're really bullish on that deal. And that deal is cash flowing already. We bought that about a year ago and doing well.
You mentioned insurance rates changing.
Yep.
How are you guys coping with that? You have enough units. Do you self-insure or
We don't.
do you have a pool? Like
we don't. We rely on our partners to insure,
okay.
and it sucks, man. It's
Yeah.
not fun. We had a deal in Florida. It went up like 4x on us, the insurance rate, and you apply that to a cap rate NOI analysis, you're losing millions of dollars at sale. I do think, though, and we're starting to see it as of the last month or so. So here's some good news. The insurers are starting to come back into the market. We have one deal in Florida where the insurance just went down 20%.
Wow. That's unheard of.
It just went down. Yeah. But it also went up dramatically a year ago. So I do think that I think and I hope we're going to have some relief with insurance.
So that's
against Stash, I'm going to preface it, man. What do I know? Just seeing what I'm seeing, I think it's going to go down a little bit.
But that's a sign that the reinsurers are coming back into the market.
Correct.
Is causing the primary insurers to then go and write business.
I'll give you an example. We had a deal that we were underwriting somewhere in the Midwest. I can't get into specifics. And we were underwriting the deal at $800 a unit for insurance. This is live as of the last month. This is the bad news. And we underwrote it for 800. The OM said 500. The T12 was 350.
Mm-hmm.
It had some loss runs. What do you think the insurance quote we got back was? So again, the T12 was 350.
Yeah.
The OM said 500. We underwrote 850.
Yeah.
It had some loss runs. What did we actually get a real quote at?
$1,200.
2,000. I'm not making this up. And we just walked away. We said we're not doing that.
Oh, geez.
Yeah. It sucks.
That is just a heartbreaker.
It checked all the boxes. A great seller, a good deal. Like it felt really good. But that's a real story. That there was no exaggeration there.
So that was because it had some losses on it. It had taken maybe a fire.
It had a fire.
Yeah.
It's some other problems as well.
Yeah.
But still, 350 in a T12 to 2,000 is disgusting. Like it's stupid. So we had to walk, and I feel bad for the seller because it's on a cap rate NOI analysis. That's a lot of money.
That's something that you can't really overcome either, unless the seller is willing to take a haircut, consummate to that raise, and chances are he's not.
It sucks for everyone. It sucks for us. Sucks for them. It's horrible.
So last year was a tough year.
Yep.
What we saw, we kept swinging and missing on BOVs and valuations and things like that. And we saw an average spread of 20% between buyer and seller expectations. I had my analyst put seller expectations and then our optimistic price, and it rounded out to about 20%. So what qualifications and skills do you think are critical for being in commercial real estate?
It's a great question. You got to be relentless.
Yeah.
Like it's so simple. It's the three letters. It's MIH, make it happen. I met this guy when I was a kid, And every day he would write MIH on his hand, literally every day. I thought it was the coolest thing ever. But you got to be hustling, man. That in the investment sales world, like if you're not calling and meeting with people, like it's not going to just happen.
No.
Like you got to go out there, even for us. If we have it, so what makes us unique and different too is if I have a slow day, I'll call some like guys who are buying deals. Say, hey, look, I'm Zach Dovner. I'm Eastham Capital. We have plenty of dry powder. If you find a deal, we'd love to chat. I don't know many people in my shoes doing that, but we have actually found probably 5 or 6 of our JV partners with just cold calls.
Cold calls. That's how I met all my friends. That's how you and I met.
Yeah, and my best friends in this industry were cold calls.
Yeah.
And then the other half is if someone cold calls you, is actually take the call. Someone emails you, respond, put yourself out there. It's not going to just come. You got to make it happen. So I know that's very cliche and it's very raw, but it's honestly the truth. It's networking. It's making it happen.
Well, it's true and it's refreshing because I think you get a lot of commercial real estate is a very snobby business. And there's a lot of, oh, we did $500 billion last year. We're the best thing ever. And it's got to go out there and hustle and make it happen. Like it's not just going to fall in your lap. And even if you are the biggest gorilla out there, there's still somebody on your heels that's trying to take it from you. So you got to go make it happen every day.
So
that's what I've found.
If you don't mind me, and you can cut this if you don't like this question, I have a question for you.
Let's go.
How much is your business down from 22 to 23?
We had an average year last year, a little less than average, but it was off 22 to 23. I think the industry was off about 40%. And we underwrote 150 deals last year that I put on that chart. It wasn't that we weren't doing things. It was just
beat that 40% number, which is, it sounds like you may have. You should be blessed. I have friends in your space who did 0 deals last year. I'm not making that up.
I know.
0. So let's all hope that the acquisition world, for my sake, your sake, hopefully picks up this year.
Yeah.
But we need some luck with rates, I think.
Do you think rates are going to come down?
I have no clue. To be honest with you. It's probably your worst answer you got. I'm sure every podcast you have. Oh, I think the rates are going to be cut twice this year. I have no clue.
Yeah.
I had a feeling today that they're not going to cut. I'm like, they're just not going to cut. They're just going to leave it there all year.
Yeah.
But then I had feelings. I'm like, oh, the market was down a ton today. They're going to cut. I have no idea. I hope they cut. I think that we need it. Let's see what happens.
Yeah.
Here's the big metric they're looking at. They're looking at rent and how much it's going up. And rent, I think, has been pretty much flat. But my concern is just for the future in terms of inflation. If the new starts are really down, call it 75%, rents are going to go right back up in a few years from now.
Yeah.
But in the short term, I don't know what's going to happen. I don't know.
I don't want to get political about this. I saw something yesterday that said COVID should be treated as just a flu now. And it's okay, great. I'm glad we shut down the whole global economy for a flu.
Agreed. Yeah. You know, look, man, I live in Florida. We were open like a month later.
Right.
But agreed. We got problems in the country.
Yeah.
Even, I mean, again, I don't want to get political either. But even the immigration, if all of these people are moving here, they need a place to live. Yeah. They can't live in hotels for the next 2-3 years. They're going to go to apartments.
Yeah.
So
no, that's true. And like you said, you can't live online. Everybody needs a place to live.
Yeah. So those are my dogs in the background.
Okay.
So here's an interesting fact.
Yeah, let's hear it.
This is interesting. I have 6 dogs.
What kind of dogs?
I have 2 Goldens.
Okay.
I have a Maltese. I have a Cavalier. I have a Lapso Apso, and I have a Lab Pit Mix.
Wow. You have a full house.
You got to lead the podcast off with that. I also have 3 kids and 1 wife.
You have a full life. That's
it
great.
And this is the playroom I'm in right now, so it's very hectic in here.
Yeah, you're doing great. You're living your best.
That's why we have to buy more deals at Eastham, because I got to support the crazy house.
You got this whole operation you gotta support.
And I would say this, if anyone's listening and they want to call me, they call me anytime.
How do people get in touch with you?
Sure. The office line is 561-571-7100. My email is zach@easthamcapital.com. That's ZACH at easthamcapital.com, EASTHAM capital.com. Stash. You can call me anytime, email me anytime, any questions. If you have a deal, great. Again, we can write equity checks anywhere from as small as $1 million as high as $30 million.
Yeah.
I'd say the sweet spot with a new deal, though, a new sponsor was more like 10 to 20.
Okay.
But so, I will say we wrote a check about a few months ago for $1.5 million. So I'll still write the checks for the small deals.
What was compelling about that deal that some people don't even get out of bed for $1 million?
Look, when you buy something for $80,000 a unit and the rents are $950 in a great area of Indiana, I'll write a check for $1.5 million. Day one cash flow of 7-8%.
There you go. That fits your box.
So my other role at Eastham is I'm also the in-house counsel. So I'll actually do the contracts and the partnership agreements and whatnot. And I will tell you that writing a check for $1 million is just as much amount of work as writing a check for $20 million. There's no difference in work, but if we're going to find great deals, we'll do the work. No problem.
Yeah. Yeah, that's true. And have you found that the bigger the deal is, almost the easier it is to do?
Sure. Yeah. It's more streamlined.
Mm-hmm.
Easier. The groups are more professional.
Yeah.
But really the best deals that we've done have been the smaller, hairier deals.
Yeah.
And we'll put the work in.
Mm-hmm.
We have a fiduciary to our investor base to make the best investment decisions possible. That's what we wake up every day when we go into the office. How can we grow the company? What's best for our investor base? And if writing a check for a smaller deal is that, we'll do it. Other groups will say a check for $1 million is too small. Don't waste our time.
Yeah. Yeah. Do you work closely with the sponsors that you, especially if they're new, like what's the monitoring process or reporting process for you?
So it's a monthly report of a T12 and a rent roll, maybe a quick summary, and that's it. We're not going to be doing Monday morning phone calls. I'd rather you be running the property. I'm not going to be picking paint colors with you. Mm-hmm. Just hit your budget. We're going to ask for a budget up front. Hit your budget, hit your numbers, and we'll be happy. You'll be happy. If there's an issue, it does happen hopefully it doesn't happen often, but listen, I've been doing this for a long time. There's been an issue or two. Then we'll get more intense in the management process. And we'll do calls every so often, but we like to be as hands-off as possible. We want you to run the properties.
Yeah. So some of the advice that I learned early in my career from a guy who lives down in your neck of the woods now, he said to me, as long as you offer a clean, safe place to live and you respond to maintenance requests, you'll always have tenants. And then I've seen other groups take it a step further, clean, safe place to live, respond to maintenance requests, and then they deliver the nicest units in that particular submarket, and they get the best tenants. I'm curious, what have you seen in the sponsors that you've worked with that are best performers? What commonalities do these folks have?
So I'm going to answer this in a few different ways, but you can't quantify management. But the better the management, the more money you'll make at the property and the better you'll do overall. You're totally right. And that's the reason why we only partner with groups that self-manage, that are vertically integrated. I just think that the groups that, this is our theory. I'll give you a story instead of a theory. I'll give you a story. I spoke to a group years ago. They owned and managed 10,000 units. Or sorry, they managed 10,000 units and they owned 2,000 units. I asked the guy on the phone, I said, look, do you manage all of your 10,000 units the same, or do you manage the deals that you own personally harder? He goes, Zach, of course, I manage all of the deals the same, whether I own it or I third party it, all the same, of course. I said, look, off the record, the deals that you own, do you put your best management there? He goes, it's human nature. Absolutely. There have been deals in the past where the numbers have worked and the location works. Stash, it checks all of the boxes for Eastham Capital, checks everything. And then you go to call their properties that they own and manage. and no one picks up the phone. And
That's
you
like the
call the
kiss
next
of death.
and you call the next day, no one picks up the phone. And then you go to apartments.com and they're offering a month free. And then you're like, you know what? We're not going to give you guys any money. And it's happened a few times, or really, it's happened actually a lot of times, where the numbers have worked, but the people, just not the right people.
And do you break the news to them? Hey, this is why.
Never.
Can't figure it out, then
you don't want to insult someone's business. I'm sure someone would love the feedback, but no, you say, oh, maybe this cap rate's not, we underwrote the deal and the expenses are too. Come up with something. I feel maybe that's a problem of mine. Maybe I should be more honest in terms of the passing of the deal. And the nice thing about us, and I think what makes us smart, is we log every sponsor. When I say sponsor, those are groups that buy deals. But we log every sponsor, we log every phone call, we log every deal. So since I've been at Eastham Capital, almost every single deal I've ever seen is logged in a database. And almost every call I go on, even if it's a sentence, every call we have is logged. So if someone does mismanage once or twice on some deals, it's likely that we will never work with them because they're in the database with those notes.
I mean, we do the same thing. Somebody messes around in a deal, then don't call this guy.
Life is short. And that's what I'm learning. Even in terms of the deals that we buy, as we've been doing this long enough, it's the tougher markets, the tougher deals. It's a lot of work. And in terms of people that you want to invest with,
yeah,
I don't want to invest with people who are tough and not great managers. I want life to be easy.
Mm-hmm.
In terms of the groups that we invest with. And I will say we have some wonderful partners. We have great relationships with all of them.
Yeah.
And it makes it a joy.
I think when you're first starting, you have to take whatever is given to you. But then once you're in it long enough, you can be a little choosy with who you do, especially in your realm. But even in ours, I don't care to fight for that listing. If he gives it to us, sure. But I'm not a big fan of that guy.
And it's listen, you want to do business with people that you like and it feels good.
Yeah. Yes.
And you can't quantify that. It's just, there's just like a feeling like I'm really enjoying this with this person.
Mm-hmm. Interesting. What are some of the biggest lessons that you've learned throughout your career?
I can say some lessons offline, but I want to keep it online because there's some lessons that
there are some biggest lessons you can share.
There are some locations I won't invest in again, which I'm not gonna share.
Yep.
But I think it goes back to you want to work with just good people. And going back to what we just said, you want to work with good people that you enjoy working with. That Stash, just like you and I, can hop on a call, we can joke around, you can laugh. We have nice relationships with everyone. I just think that some of the relationships that we almost got into. It's funny. So again, my other hat is I'm an in-house legal counsel. So you start the relationship off with really a joint venture, limited partnership agreement. And you could tell almost quickly how easy they are to work with. Because I'd say to them, look, here's our JV agreements. Here's our terms. Let's talk about them. And they say, okay, let me review. And then they come back, some of the difficult ones, and they redline every single line of the agreement. And you're like, this doesn't feel very good.
Yeah.
And then we have other partners and they come back and they say, Zach, I have some questions on this, or if this doesn't make sense, can we talk about it? And it's a nice way to start a relationship. Mm-hmm. It's almost like for anyone. So now I'm going to give dating tips. But if you're, dating someone and they're giving you grief, can you imagine getting married to them? It'd be terrible. Yeah. So it's the same way. If we're going over a joint venture agreement and the process is just brutal and there's attorneys and we're arguing, life's too short. I don't want to play that. Let's collaborate. Let's work together on questions you may have. Mm-hmm. So make life easy, work with good people, make good decisions, be patient. Those are my lessons, and make it happen.
Yep. This is great, man. Thank you so much.
One more tip of advice for your listeners. This is the big one. Don't have 6 dogs.
Don't have 6 dogs.
Don't have 6 dogs, man. It's too much. Actually, I have 2 cats too. 2 cats. You're not going to have me on again.
Oh, this is great, man. We're gonna make it a regular segment.
Whatever you need, man. Whatever you need.
Awesome, Zach. This has been so great. I really appreciate you being a guest here, and I hope you have a great evening.
Stash, take care, man.
Thank you.
Pleasure.
All right.